This episode is brought to you by Infuse, where agility meets scale, where compliance meets confidence, and where bold ideas become reality. Find the only place where card issuing and processing comes with happiness built in. The Infuse modular next-generation platform gives you exactly what you need, from BIN sponsorship and scheme access to compliance and fraud prevention, while you stay in control of your customer experience and roadmap. Infuse, innovative card issuing and processing that fuels innovation. Discover more at infuse.com. Does moving money across borders feel scary? This episode of Fintech Insider is brought to you by 3S Money, a fintech scale-up that makes global payments simple, predictable, and human. With 3S Money, your business gets multi-currency accounts and local IBANs, enabling you to send and receive payments in all major currencies, reaching the widest possible range of destinations. You'll also have a dedicated account manager, a real person, not a chatbot, guiding you through every step of the way. Enjoy the best FX rates, fully transparent fees, and premium service backed by regulation you can trust in the UK, Luxembourg, UAE, and Hong Kong. Go global with confidence. Open your account today at 3s.money and find out more.
Hello and welcome to episode 1007 of Fintech Insider, brought to you by 11FS, the 5-time consultancy of the year that works with banks, investment firms, digital banks and fintechs to build the next generation of financial services. I'm Benjamin Ensor, Director of Research and Strategy here at 11FS. And this week I've been working on all sorts of things, from best practices in mobile investing through to subscription accounts and thinking about commercial variable recurring payments in the UK. So things are heating up in the world of fintech, as always. We've got a lot of hot stories. So helping me to take the temperature on this week's headlines is our fantastic panel. First of all, it's a very warm welcome back to Fintech Insider for Thomas Easterby, Head of Fintech at HSBC Innovation Banking. Welcome back to the show, Thomas. It's great to have you back. We're going to be hearing a little bit more about some of the findings from your Q3 findings very shortly. But I also gather you're going to be joining us at our next After Dark event in London on the 20th of November.
Yeah, absolutely, Benjamin. We love the After Dark events, like to kind of get close and personal, meet some people in the flesh, and you always bring a really good room to those events. So we're quite excited for that for next month.
Fantastic. I think most of our listeners probably know what an HSBC Innovation Banking is, but could you just do a sort of a one-sentence overview for listeners maybe elsewhere in the world who perhaps aren't quite clear what HSBC Innovation Banking is?
Of course, yeah. HSBC Innovation Banking, we provide banking and funding, predominantly debt funding, to businesses across the UK innovation economy, from seed stage right through to pre-IPO and beyond. Our ambition is to help them grow in the best way possible, and we can do that through banking, through a bit of funding, and through general ecosystem connectivity.
Fantastic, and welcome. And next up, we have a Fintech Insider debut for Barry O'Donoghue, Chief Executive and co-founder of Raidiam. Welcome to the show, Barry. Could you please introduce yourself to our listeners and tell us a little bit more about Raidiam, please?
Sure. Great to be here. Thank you. So Raidiam was founded 2016. We're headquartered in London. We're a SaaS tech business that works across the globe. And I guess in simple terms, we provide the plumbing for data sharing that sits at the center of initiatives like open banking and open finance globally. So as an example, we power open finance and open insurance in Brazil, which is driving really major societal impact. And we work, as I said, from Brazil right way across the world to New Zealand, delivering national level consented data sharing. And we count central banks and sector regulators and major corporations as our customers.
Fantastic. Thank you so much for joining us.
Great to be here.
And we also have another Fintech Insider return for Arun Tharmarajah, Head of EMEA Payments and Banking. I said that the wrong way around. EMEA Banking and Payments at Wise. It's really great to have you back with us, Arun. Please, could I ask you also to introduce yourself to our listeners and tell us a little bit more about your role and about Wise, please?
Yeah. Hey, everyone. Great to be back. I was looking through my inbox, and I think the last time I did this was 2021. So it's been a while, but I'm a big fan of the show and it's always nice to be on. I lead EMEA banking and payments at Wise. Wise is a global technology company that focuses on moving money across the world, trying to solve the problem that moving money across the world in different currencies can be often very difficult, very expensive, and very slow. And we've built a company now with over 5,000 people moving billions across the world, very much focused on improving this experience.
Fantastic. Welcome. Well, welcome to all three of you. Right, let's get cracking with our stories. So our first story is indeed about Wise, which is that Wise is challenging India's foreign exchange card market by announcing its first travel card for the country. So Wise has opened a waitlist for its travel card in India, positioning it as a challenger to existing FX card offerings or multi-currency card offerings in the market. The card promises transparent mid-market exchange rates with minimal conversion fees and no hidden charges, unlike many traditional bank or foreign exchange cards. It supports 40-plus currencies, enables instant switching between currencies, and offers both digital and physical card functionality. The entire onboarding and account management is done digitally using an app, video, Know Your Customer, and integration with various Indian systems like DigiLocker, removing the need for branch visits and paperwork. Separately, Wise has also been granted approval by the Central Bank of the UAE to sell its money transfer and payment services into that important Middle East market. So, Arun, let's come to you first on this one. I'm going to start with a really sort of basic and obvious question. What's the market opportunity for India, the most populous country in the world? What was it about the world's largest population that attracted you to India?
Yeah, look, this is no huge secret, or there's no major science in this one. India is a very, very big market. And if you look at the travel card market exclusively, it's forecast to reach about $17 billion in 2025. So being a company that is very much focused on foreign exchange, moving money around the world and making that experience as convenient and as transparent as possible, this was a very nice fit for a market that we have already made significant investments in and will continue to make investments in. So we announced last week that we've opened the waitlist for our travel card. We think it's a really exciting product to bring to the market, where in India you have a middle class that is growing at a tremendous pace, that is very financially literate, highly educated, and is increasingly wanting to travel and experience things globally. And we think this product will be a really nice fit, and we're working really, really hard to get it into the hands of our customers.
I know these potential customers, pretty much the same kind of people that you're serving in many of the other markets that you're operating in today. I mean, you did just describe them as sort of middle classes. Presumably it's sort of maybe slightly younger middle class people who are traveling a lot. Is that correct?
Yeah, so it varies market by market. What we're really focused on is solving that problem, right? It's no secret. Sending money abroad can be sometimes very problematic, can sometimes take days, and the fees around moving money can be very hidden. And we've done loads of research where customers around the world simply don't really understand how much sending money from one country to another costs. So we're always just focused on that single problem, and we have over 5,000 people around the world focused on this. And I don't think there's many companies simply focused on a single problem like this anywhere in the world, and we're really proud of that. So in India, we're specifically looking at this segment, but it's not an exclusive decision by any means. Anyone can use the card, and anyone, providing they meet our requirements, can onboard onto Wise and use the product successfully. And that's the way we look at it across the world.
I'm going to ask a question now that's going to sound sort of slightly rude, and I don't mean it to be rude, but in a sense, what took you so long, right? Because you've got an engineering center, I believe, in Hyderabad. You must have presumably hundreds of thousands of Indian expatriates using Wise in other countries. Why didn't you do this before, if you don't mind me asking?
Yeah, it's a good question, and it's a question we all ask ourselves regularly, like what's taking us so long? So this is part of a journey, right, that we've been on. We've been in India for some time. You're correct that last year we really doubled down on our investment in India by launching an office in Hyderabad, and we now have over 200 people based there, and it's a full stack office. So it's not just an operational center. We're hiring roles across product, engineering, marketing, operations, and this is an evolution of our journey in India. So we've, for a number of years now, allowed customers to send money to India. In fact, we believe that out of all the money going into India, Wise makes up for about 10% of all that money. So it's a journey that we're going on. And then we work with regulators. We obtain even more regulatory permissions, and that allows us to bring even more products and services to customers. So going through some tricky regulatory processes takes a lot of work, especially when you're bringing a fully digital product to the market. So this is a product where, to do this in India, you typically have to upload flight tickets, upload hotel details to get through some quite strict regulations, and building that into a process and a product that's fully digital and really convenient and helps us help our customers was very important to us. So we wanted to get it right when we launched.
Thomas and Barry, let's bring you guys in. What do you make of this? Is this a sort of slam dunk for Wise? Or do you think actually Wise is going to find there's actually some quite tough competition? Because, there's a lot of banks and other providers in India. India's a big market with a lot of very smart people. Maybe Tom first, then Barry. What do you both make of this story?
I think the Indian market's super exciting. The pace of growth in the population together with the kind of wealth that's around it. I think there's so much activity there that doesn't, I think it'd be hard for Wise to fail on something like this. Just the level of diaspora that must be around the world. I think there's something like 20 million non-resident Indians that are kind of around the world that probably already touch kind of products like this already, that when they're going back home and talking to friends and family and talking about their travel experiences, I think the kind of word of mouth effect will be fantastic for the Wise brand, really.
Thank you. What do you think, Barry?
Well, I was going to pick up on the second item about your licenses from the Central Bank of the UAE. It's a country close to my heart now, having moved there a year ago. So I'm based in Abu Dhabi. We also count the Central Bank of the UAE as our customer. And we are leading on an open finance initiative there over the next 5 years. We're kind of rolling out to the tier ones. And I'm sure Wise will get to play a role as part of your initiatives there. And it's very exciting. I think it's a very progressive, forward-looking environment. There's a financial infrastructure transformation, or FIT, program going underway with 9 initiatives, of which open finance is just one. You've got instant payments, you've got CBDC, you've got a range of initiatives around tokenization, etc. And I think it's a very exciting place to do business. And they're really looking to drive their market as being a real financial hub globally. So I think that's very exciting for Wise and for others.
It's also, of course, a country with a spectacularly high proportion of sort of expatriate sort of workers. I mean, it's something like, correct me if this is wrong, it's something like 90% of the population of the UAE are actually people from other countries who've come to Dubai, come to Abu Dhabi to work. Arun, presumably you've seen a lot of appetite from people in the UAE already.
Yeah, and again, this is something we're also very, very excited about. So we've recently obtained full regulatory permissions to launch our products and services in the UAE. It's a market that has over 200 plus nationalities there. So it's, again, a market that has many, many people who have a cross-currency need that are often very poorly served by domestic banks. So we're working very hard to bring our products and services live to the UAE, and doing it the right way by working with the Central Bank of the UAE, obtaining the full suite of regulatory authorizations was the first step on this journey, and we're working very hard to get the products in live.
Maybe Barry on this one. How important do you think it is doing it the right way, as Arun just said, right? Because there's probably ways that Wise could operate without perhaps getting a license. There's probably some things you could do. You as you say, you know the central bank quite well there. How important is it to do things the right way, would you say?
I think it's incredibly important to really apply for and receive the licenses under the framework from the supervisory authority, and to be able to benefit from the full range of services that you can offer and bring to market. So I would always encourage that, as opposed to trying to skirt around the fringes and try and have it by proxy. I don't think you can have a meaningful impact on the scale that Wise wants to operate with such a large international expat kind of community and a lot of remittance and FX. So I think absolutely the right choice.
What are the things, Arun, that you can do once you have the sort of right license that you can't do? And obviously, licenses in different countries are a little bit different, but what does that payments license in the UAE enable you to do that you couldn't do or couldn't easily do without that license?
Yeah, so every license and every regulatory regime has their own flavor of permissions. What we really want to do is to be able to contract with customers in that country, hold their money in what we call the Wise account, which is a multi-currency account, and allow customers to send that money abroad using the network that we've built that serves over 40 plus currencies worldwide. And the exciting evolution that we're seeing all over the world is, none of these licenses are strictly bank licenses, but we've been able to, despite not being a bank, build our own connections into the payment systems. So that means that we're in full control of the infrastructure that we have. We can enable our payments to be as instant as possible. Over 65% of our payments are now instant and done in under 20 seconds, and bring down our costs as much as possible. So when we did this in the UK, for example, we were able to lower our operating costs of moving money by about 10 times. So it's an evolution that we're seeing regulators work through to allow competition in the market and increase innovation. And we're really excited about what's coming for our customers in the UAE.
Tom, is there and this may be a bit of a difficult question, is there a sort of wider benefit here from when we see British companies or British founded companies like sort of Wise and so on succeeding internationally? Does that help other British companies sort of follow a similar path? I mean, do any of the companies that HSBC Innovation Banking supports, do you see some of them sort of looking to try and emulate the most successful sort of British tech companies?
I absolutely do think that, Benjamin. Yeah, I think if you're an early stage founder and you're seeing a UK born, bred, grown business that becomes an international success story, it's part of the ambition, isn't it? That's something that you want to kind of replicate, and it becomes kind of part of the inspiration around starting your business here. I also got kind of a big bias that I think it also breeds a lot of kind of talent as well. It kind of helps to recycle a lot of that kind of knowledge, experience, that talent. We see this a lot with all the kind of big fintech neobanks, where kind of the next generation of spin-outs that come from these businesses are often kind of the success stories of the seed Series A stage that we see. And so I think seeing an international success story, seeing someone like Wise go out and conquer new markets in such a fantastic way, can only be a bigger endorsement for what we can build here in the UK.
All right, Arun, last quick comment to you, and I'm going to ask you a totally unfair question. Which are you more excited about, the growth in India or the growth in the UAE?
I'm going to remain very neutral on this because I work very closely with both sets of teams that are responsible for getting this product live. I'll be cheering them on equally, and let's see who gets there first with getting things live.
Have you done any internal analysis on which one is perhaps more important for the long term?
I think they're equally different and equally exciting. So, India, as we discussed, has a huge population that is growing, is increasingly looking to travel, and has increasing financial sophistication. The UAE is just so diverse in their foreign currency needs that they're not just sending money to one or two countries. We're seeing demand for people to send money from the UAE to places like Indonesia, the US, Singapore, Brazil. And that part is also quite exciting because of the infrastructure we've built. We can support them in all of that. So they're two slightly different use cases. I'm going to remain on the fence to be a bit boring and say that I'm cheering them on equally, but they're both really, really huge opportunities for us.
Well, two super exciting opportunities. So congratulations to you and all of your colleagues. Okay, well, let's move from that success story to another success story, which is that UK venture funding has reached a multi-year high, according to HSBC Innovation Banking's Q3 figures. So in the third quarter of this year, British startups and scale-ups raised $9 billion in venture capital, making it the second highest Q3 on record for the UK. Year-to-date funding has already hit $17.3 billion, equaling the total for all of 2024, and the full year is projected to close at perhaps $23 billion. The quarter's activity was fueled by 12 mega rounds, that's deals surpassing $100 million, including Revolut's $2 billion raise and Nscale's $1 billion deal. Fintech remains the most funded sector, drawing $5.3 billion this year, while investment is increasingly spreading beyond London, with 45% of rounds happening outside the British capital. Thomas, it's fantastic to have you here to tell us about some of these findings. What sort of pleased you most and what surprised you most from some of these figures?
Oh, good question. If I can just start by also kind of giving a little bit of background, we've been kind of conducting this survey alongside our partners Deal Room for a number of years now. So it helps us to really get a pulse of what's hot and what's occurring across our space, and what the UK innovation economy is really doing with itself over the kind of the previous quarter. What have we found that's been really interesting coming out of the last quarter's data? I think it really shows that there's some forward momentum returning in the UK innovation economy. I think those mega rounds have skewed the data up so slightly, but I think it really does demonstrate that global investors continue to see the UK as a place where world-class businesses can really thrive and be delivered. One of the most striking aspects of the data, I think, for this quarter is just the breadth of activity. At the start of the year, I think there were a few concerns that we were starting to get a bifurcated market a little bit, with an abundance of seed, Series A deals coming into market, particularly in new technologies like stablecoin and AI, and then quite a lot of activity still at the mega round. But actually, in the last quarter, we've really seen an increase in all life stages, really, like from seed, Series A, growth stage, right through to the mega rounds.
Fantastic. Barry, as someone at a British startup or relatively young sort of British founder business, obviously you operate globally. Do you when you look at the UK, do you think it's got its sort of vim back? Do you think there's a bit of vigor coming back to parts of the British economy?
Well, I think the wider economy, I think, is a question mark. We'll see what the November budget looks like. But the fintech ecosystem is thriving and alive and kicking for sure. We are born in Bishopsgate, and we've been exporting our products and services globally around the world very successfully, and we see great opportunities at home here coming to light now that we're very, very excited about, and really drawing on our international deep domain expertise from overseas markets and bringing that back to the UK to really drive the next wave of innovation at home. So I think there's great prospects. We see that in the investment in fintech, second to the US, and taking up most of second largest and most, I think, 13 or 14 markets in Europe, combined as the next. So the UK continues to punch above its weight, and I think there's no danger in that continuing.
Tom, one of the things that was quite pleasing in this was seeing that more of the funding is coming from outside London. I mean, London has, sort of dominates the British economy a little bit like some other cities like Paris, does to the French economy and so on. But you're reporting actually, places like Edinburgh, Manchester, Bristol, seeing lots of activity as well. Is that a sustained shift?
Absolutely. And I think this is one of my favorite data points from the survey over the last couple of quarters. Over Q3, we're seeing that 45% of rounds now come from outside of London, as you mentioned. And I think that's kind of been an ongoing trend as funders and both VCs and founders are looking to kind of find new and innovative ways to kind of put capital to work. And coming out of the bubble of London can often be a nice way to activate that. Personally, I think it's a hugely positive trend. I think leveling up across the UK is exactly what we need. I think seeing talented founders get funding is exceptional, really, and what we should be seeing more of. In terms of kind of what's driving this, the continued growth of university spin-outs, which is it's not new. We've seen this for over the last kind of decade or so, or if not more. But to see kind of Oxford and Cambridge still sit as kind of second and third across the league tables, and see lots of the other big university cities kind of buoyant from that is really quite nice to see. A lot of the wider regional funders, the likes of Scottish Enterprise, Northern Powerhouse, Mercia Ventures, etc., they've really kind of stuck a claim into some of the regional hotspots. And I think when we've been out in the market seeing the activity in different pockets, seeing these investors and these funders really develop a home local ecosystem is key, really. And I think that really helps people feel like they're part of an ecosystem that is outside of London. What we have kind of in the Shoreditch Hull Street roundabout area kind of gets replicated in different pockets all around the UK, and really helps to kind of thrive and share that knowledge and talent and recycle a lot of the stuff we're seeing and kind of keep that culture of growth and stuff fostering. There's one other element I think is kind of relatively close to my heart, and it's around corporate innovation. I think as we're starting to see more large corporates really invest in tech, really invest in their own innovation, develop things like their own ventures arms, their own kind of like technology that they're spinning up within their own in-house elements. I think we're starting to see some of that talent and curiosity around the tech ecosystem kind of come out of those big corporates and into starting businesses themselves. Cardiff's quite a city that's close to my heart as my hometown. Admiral Insurance there does a lot of work around innovating their own product and service in that market, and there's been a really good ecosystem that's developed around that, where kind of talent has spun out of that and gone on to build out their own business across the fintech space as well, and creating quite a nice little hub there of talent and culture that's really kind of helped to a city like that to become quite buoyant. In fact, we're seeing them as fourth on the league table of funds raised in 2025.
Arun, I'd love to bring you in on this. And we've talked about Hyderabad earlier, which, correct me if I'm wrong, is not one of India's largest cities. It's a big city, but it's not one of India's largest cities. At Wise, are you sort of seeking talent in slightly smaller places? Have you got operations at Wise in the UK outside London? How do you get that sort of diversity and creativity from different places?
Yeah, so our main office is in London, and that's because it's where we started out. It's our spiritual home, and it's where we've kind of built the product from the ground up. But we have offices in so many different countries, and whenever we enter a market, we do quite a deep analysis with our people team, our HR team, our legal team, and various product teams and engineering teams to work out where is the best place to put an office, and where is the best place to attract talent, and where does it make sense for Wise. And there are so many factors that go into that. And often for a financial services company like Wise that tries to find the balance between traditional financial services and the requirements of a traditional financial services company, but also a technology company, we also have to think about, is it good to be quite near where the regulator is, for example, because we need to have a very strong relationships with the regulator in the country. We also look at how easy is it to get a train, bus, flight between where you need to get to have some of these crucial conversations, but also where is the talent? So it varies tremendously city by city. We chose Hyderabad because it had a nice mix of all of those factors, and India being such a huge, diverse country, it means that you can really build up a strong presence in a number of different cities. In the US, for example, we've recently expanded our Austin office because we believe that we have a strategic presence and that we can grow our strategic presence in the US out of Austin. So it varies market by market. There's no one-size-fits-all formula, but we've been able to build a global team full of people from all over the world in a really successful way. So no one-size-fits-all.
Right. One last question for you, Thomas. Where's this funding coming from? It's fantastic that there's lots of funding coming into British startups. Where's it coming from? Is it mostly coming from British funds? Is it coming from foreign funds? I don't want to sound nationalistic about it, but who is investing in British startups?
Yeah, it's been a key trend we've been seeing over the last couple of years, that in the earlier stages, we still get kind of a lot of UK capital deployed to UK companies, which is brilliant. And then you get that kind of inflection point when a business starts to kind of internationalize and starts to get to its growth stage and needs bigger check sizes in order to kind of really supercharge that growth. And unfortunately, our cousins across the pond have bigger pockets than us around this sort of area. And so US capital coming to UK and to Europe to fund later stage growth businesses is still a key trend that we're seeing. You look at the Revolut raise last month, that 2 billion there, a whole plethora of investors in there, but clearly a skew away from the UK at that point. I think what's also quite important is to kind of articulate what are we in the UK trying to do different to this, and some of the things around the Mansion House rules, the kind of changes to pension rules, etc., really can try and drive some of that changes. But I think it's also imperative on us to kind of make sure that we're shining the spotlight on UK businesses, making sure that those UK investors that are quite susceptible to wanting to invest in UK growth stage businesses get the opportunity, and we're kind of connecting them up as much as possible.
Fantastic. Thank you so much. We could talk about this all day, but we need to move on. So on that note, we will take a quick pause here and we will be back shortly.
Finished training for the day? Time to fight post-workout fatigue with Core Power Protein Shakes. They're packed with 26 grams of high-quality protein to build muscle and electrolytes to help hydrate. The nutrition you need to help your body replenish, rebuild, and repair post-workout so you can power on to the next one. Champion your recovery with Core Power. Visit corepower.com to learn more.
The family that vacations together stays together. At least, that was the plan. Except now, the Dastardly desk clerk is saying he can't confirm your connecting rooms.
Wait, what?
That's right, ma'am. You have rooms 201 and 709.
No, we cannot be 5 floors away from our kids.
The doors have double locks. They'll be fine.
When you want connecting rooms confirmed before you arrive, it matters where you stay.
Welcome to Hilton. I see your connecting rooms are already confirmed.
Hilton, for the stay.
Before we dive back into the news, a quick word about our latest Insights episode. Artificial intelligence is everywhere. Your feed, your boardroom, your LinkedIn inbox, all buzzing with ChatGPT generated everything and promises to transform this, that, and the other. But when you look at actual customer-facing use cases in financial services, there's not so much to see. So what's holding things back? This week on Fintech Insider Insights, we cut through some of the hype to talk about what's really working. Smart chatbots, virtual agents, faster onboarding, automated know your customer and compliance, saving hours, reducing errors, and getting customers answers faster. My colleague David Barton-Grimley is joined by a panel of experts from Starling and Multiply to ask the big questions. How do we go from these small wins to truly transforming the customer experience? Find it in the same podcast feed as this one. And now, back to the news. The UK's Financial Conduct Authority has launched an Open Finance Accelerator. So the Financial Conduct Authority, or FCA, has introduced a comprehensive strategy to advance open finance in the UK, aiming to enhance consumer control over financial management and future planning. In partnership with KPMG and Europe Economics, the FCA has published a report highlighting the benefits of open banking and finance, emphasising the need for balanced data sharing and robust technological infrastructure. The Smart Data Accelerator extends the FCA's sandbox, enabling firms to pilot open finance applications. The FCA plans to conduct 2 tech sprints between November 2025 and February 2026, focusing on innovations in mortgage processing and small and medium-sized enterprise services. To tell us more about this raise, we briefly spoke to Colin Payne, Head of Innovation at the FCA.
It's Colin Payne here, the Head of Innovation at the FCA, and there's big news this week from the innovation team. We've just launched 2 groundbreaking open finance tech sprints under our new Smart Data Accelerator initiative. These sprints focus on 2 of the most important challenges in people's financial lives: home ownership and small business credit. We're bringing together the banks, fintechs, data providers, and policy experts to co-design practical, scalable solutions that make financial data work harder and fairer for everyone. I'm also thrilled to announce, alongside this, a new partnership with Raidiam, who are powering the data infrastructure that will enable secure, real-time testing of open finance use cases. This collaboration helps us move from theory to practice, turning smart data into smart outcomes. Applications are open now, so if you're passionate about the future of open finance and want to shape how data transforms markets for good, this is your moment to get involved. The Smart Data Accelerator, innovation with purpose. Feel free to reach out to either me or the team, and would love to have you involved. Thanks ever so much.
Barry, it's fabulous to have you here as someone who's passionate about open finance and open data. So you partnered with the FCA for the Smart Data Accelerator and the upcoming tech sprints. Can you tell us a little bit more about it?
Sure. We're super pleased to be partnering with the FCA on their Smart Data Accelerator ahead of 2 exciting tech sprints coming up in November. We've been discussing how we could help power the FCA Innovation Sandbox to really accelerate their thinking on open finance and smart data. So the 2 tech sprints are covering mortgages and also a second one covering SME finance. And, we're providing our award-winning trust framework technology, Raidiam Connect, to power secure data exchange between trusted participants in a fully representative fashion so that, this collaboration will enable concepts to move from theory to practice, to have real world implementations, and to co-create essentially real concepts and to launch new propositions that serve consumers in managing their financial lives better.
So what does your sort of framework do? What can you tell us a little bit more about what's the sort of plumbing underneath it? What are you enabling firms to share?
Sure. The secret sauce is our product, Raidiam Connect. We brought that to market in 2020, roughly. The origins of that come from Open Banking Limited. So we pioneered the technology, having conceived of, designed and built the trust services that have underpinned open banking for every consumer and every business for almost 8 years now. So it's really stood the test of time. And we've brought it to market as a cost-effective turnkey solution. And really it enables secure innovation at scale between a large group of participants, those participants that are surfacing data, maybe account providers, and the fintechs that wish to rely on and consume that data on behalf of consumers and businesses to drive some innovative propositions that maybe don't exist in market today and to really benefit them in their financial lives. So it is plumbing for a large extent. It bundles a directory capability. It bundles a public key infrastructure that issues digital certificates to ensure the authenticated, encrypted integrity of connections and all of the data that moves over the wire. So it's really exciting. We're delighted to be involved.
Thank you. I'm keen to hear from sort of the panel as a whole about the UK's sort of progress with open finance. I mean, obviously this is very, very exciting. But on the other hand, sometimes, when we're talking to small businesses, for example, we hear them sort of expressing frustration with sort of direct debits and standing orders because they're just not flexible enough for the kind of subscription-based pricing that lots of the kind of innovative startups, Tom, that you work with, are sort of trying to set up and so on. Is the UK moving as fast towards open banking as it and open finance as it sort of could and should, or have we sort of just sort of slowed down a little bit compared with, let's say, India, Arun, where we were just talking about, and UPI and so on. And I realize it's a little bit of a loaded question, but Tom, Arun, what do you think? Are we moving fast enough in the UK, or have we sort of slowed down a little bit?
I definitely agree with you, Benjamin, that when we first kind of had the big bang of open banking, we all thought we'd be using these new payment rails in exciting and efficient ways, and it would bring down cost. It would be very, very kind of good for the wider economy. I know banks like HSBC spent quite large sums of money being able to implement the right technologies to be able to kind of be part of the network. But then being able to find ways to be creative and innovative and use the rails, it seems to be quite lackluster. Got couple of companies that are doing fantastic work around the kind of account-to-account payment rail methods, the likes of TrueLayer and Yaply and others. And I think that's fantastic for its own use case, but actually being able to do something that's broader on a payments business, payment rails and a payments perspective is a little bit more lackluster. I'm really excited about what Barry's building and what they're kind of doing around data for it. And I think kind of being able to utilize open finance, open banking from a kind of information sharing perspective, whether that's kind of better credit decisioning that might come out of the kind of mortgage work stream that'll be happening, or kind of being able to promote financial inclusivity by being able to make sure that credit scoring is being done in the right way, I think is really quite key.
Yeah, I'd probably agree. I think when you look at open banking, the UK has done relatively well in that space. So we allow customers, for example, to add money to their Wise account using open banking alongside a number of other payment methods. And it's one of the most popular ways to add money to your account in the UK. However, you look all over the world and we're seeing, the UK is far, far more advanced on this journey than a number of other markets, including Europe, the US, and various other parts of the world. But as Tom said, outside of the open banking scope, where with payments and account information, the other elements of open finance, be that SMEs, mortgages, pensions, are all still very, very far behind. And it's really cool to see the FCA push forward with this. And I've seen they've got loads of really cool plans, but there's still a tremendous amount of work to do. Any aspect of personal finance and SME finance that currently isn't touched by this open banking scope just still feels like it's 10, 15 years behind everything else that's happening in payments. So it's really cool to see Barry and co just work with the FCA really closely to help push this forward, because there's still so much potential for disruption, innovation, and so many use cases that probably haven't even been thought of yet.
So Barry, what are you most excited about? What are you most hoping to sort of see come out of these sprints, come out of this work that you're doing with the FCA?
Ultimately, we're going to be extending the scope of data to include new scope, right? So beyond current accounts, we're going to be looking at the possibility of managing, mortgages, right? The possibility of dealing with SME finance. And these are just two of the use cases to start with, right? They're priority areas that CFIT has explored, Centre for Finance Innovation Technology. And we think there's significant benefits to be driven. And these accelerators essentially will allow participants to create and to be creative in thinking how to solve for some of the problems that exist that consumers haven't been able to manage as effectively to date. And we think that can really drive real benefit and real value for consumers and for businesses. So we're incredibly excited about the prospects and seeing what people are able to bring to that, and the innovation days that are scheduled and the demos. So it's a really interactive, creative exercise, and it's great that the FCA facilitate and foster that.
And what sort of companies are you expecting to take part? Is it going to be sort of startups with sort of one or two developers, or do you think, I don't know, HSBC Innovation Banking or Wise might take part? Will it mostly be small firms, or are you hoping you'll get some bigger firms taking part as well?
Typically, what we see is a real mix, right? You see new potential startups that are maybe in an incubation stealth mode, looking for an opportunity to bring a new proposition to market. You see established players already in the open banking space who are looking at adjacent go-to-market efforts. And they're well placed to execute because they've built that muscle, they've built the intellectual capital, they've got the capability to execute. And you'll see larger players too, who've got large books of mortgages and who could potentially serve better the SME in terms of underbanked and unfinanced. So I think you'll see a real mix.
Fabulous. Well, we're going to have to get you back onto the podcast in 6 months' time to tell us about all the success that you've seen.
I should look forward to that.
Fantastic. Well, congratulations to you and your team at Raidiam, and best of luck.
Thank you very much.
To the FCA and Raidiam in driving this important innovation forward.
Indeed.
Okay, let's move on to our next story, which is that Goldman Sachs is acquiring industry ventures for around $1 billion as alternative venture capital exits surge. So Goldman Sachs is acquiring Industry Ventures, which is a venture capital firm with some $7 billion in assets under supervision, for about $965 million, making it one of the largest alternative sort of VC acquisitions in a long time. The deal gives Goldman access to Industry Ventures' portfolio of secondary fund stakes and direct venture investments, expanding Goldman's footprint in alternative assets. And the acquisition comes amid a surge in venture capital secondary market exits, driven by investors seeking liquidity and trying to redeploy capital into new funds. Industry Ventures' team will continue to operate independently, while Goldman uses its global distribution and capital to try and scale its secondary market offerings. So this is an interesting story. I mean, Goldman Sachs, obviously vast investment bank, and you always sort of think, well, surely they've got capabilities everywhere. What do they need to acquire? But here they are acquiring a VC fund. Thomas, what do you think of this? Is this driven by the sort of maybe the difficulty of doing IPOs, of sort of needing to find alternative ways for sort of startup businesses to get funding? What do you think the story is here?
Yeah, I think it's exactly that. Quite a few years ago, secondary portfolio sales would have been a bit of a dirty word. They would have been the sort of portfolio sales that kind of were a bit lackluster, and there's probably a little bit of value in there if you really wanted to roll your sleeves up and work quite hard for it. But actually, kind of overall, they were seen as a kind of quiet exit for a portfolio. With the kind of equity markets not performing quite as well as we would like at the moment, the public equity markets, and being open for IPO exits, with there being a need to start to see some real kind of quality recycling of capital. I think a lot of very, very interesting, very, very credible funds are using this as an avenue to put more capital back into their machine and recycle it through. So no longer is it the dirty word, but actually it's a very credible avenue to get more capital back. I think someone like Goldman Sachs, it's a fantastic example for them to be able to kind of take some of the great wins that they've already had with their direct VC investing and with their secondary strategy already, and just amplify that. They've already got a great platform. They've already got kind of a good experience of investing in the right sort of technology companies that have performed exceptionally well, and then being able to kind of take that next step further, and kind of broaden that out into other parts of the same collection of assets, really.
Barry, what do you make of this story? Because we've seen a number of startups in the UK getting acquired, sort of fintech startups getting acquired, so perhaps when the founders set the business up in the first place, they imagined, the IPO and, ringing the bell on the stock market and so on. But actually quite a common path for successful fintechs is to become part of other bigger, more successful fintechs. Do you think there's maybe a sort of shift in thinking about how to sort of repay the venture capital?
Possibly. I look at the numbers here and I think, wow, these are serious. It's an interesting move by Goldman, the secondary market and VCs. So I guess we're, as a business, as Raidiam, in the privileged position of having fully bootstrapped the business and scaled it organically without tapping external funding or debt. And this has really enabled us to innovate and grow at a fast pace in a very disciplined way. And we've performed exceptionally well, expanding into overseas markets, thankfully without needing to do a round or a raise and dilute in recent times, which has been fantastic. So we're hoping to continue on that path and to grow the business to an exit event without potentially having to dilute at all. So that's quite an unusual and unique position, and therefore we kind of track under the radar in a lot of these things.
Indeed. Impressive. Arun, I realize you're not going to be able to tell us Wise's list of fintechs that you're looking to acquire, but have you sometimes thought as a business about where there are sort of other fintechs that maybe have capabilities that might fit with Wise? I can't remember whether Wise has actually done any acquisitions itself, but presumably you occasionally think about, is there a little fintech in this market or that market that actually might suit your portfolio quite well?
Yeah, we always try and go back to the customer problem, and it's what I discussed and described earlier, which is around this problem of money movement across borders. And we try and think through what is the most complete way we can solve those customer problems, and ideally a way that's never been done before. And almost always we come to the conclusion that if we can always try and do this best ourselves, because we have this knowledge of solving the singular problem in so many markets now, that we're quite unique in the experiences that we can bring to a market. And when we go and speak to regulators, like we have done in India and the UAE and all over the world, we can often share our experience of solving this problem in other countries. So more often than not, our thinking and our logic takes us to, we should probably try and do this best ourselves, because it's usually the most complete way of solving this problem. And that typically tends to be the way we approach it.
Thomas, last quick question for you. I was looking at this story and I was thinking, is this basically an American story? This is, about secondary market liquidity in the States, but actually maybe there's a bigger story than that. Do you think this has sort of ramifications for startups in Europe, Asia, Latin America, as well? Is this a US story, or has this got implications a bit more widely?
No, I think it does have global implications, because it just further exemplifies how pockets of capital can be global. And so you've got a big investment bank like Goldman Sachs looking to deploy capital into this part of the market. As I said earlier, Goldman's had a really successful track record with its VC investment already, although be it, kind of relatively modest in scale. So this is clearly a testament that they're kind of doubling down on that and wanting to kind of go further into it. And you see that with a lot of the big banks. You see that kind of with CVC arms. HSBC ourselves, we've got a fantastic CVC arm that we invest into a number of great quality companies that we feel can move the dial in our business, but also kind of move the dial in the ecosystem as a whole. So I think that kind of really shows the founders of early stage businesses that there's a really good story here. There's a really good theme to more equity capital being around to support their ambitions, and it might come from pockets of and locations you didn't necessarily think would be the usual route.
Indeed. Okay, well, we'll take another quick pause here and we will be back very shortly.
This episode is brought to you by Indeed. When your computer breaks, you don't wait for it to magically start working again. You fix the problem. So why wait to hire the people your company desperately needs? Use Indeed's sponsored jobs to hire top talent fast. And even better, you only pay for results. There's no need to wait. Speed up your hiring with a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
Okay, now for a quick look at one more news story this week that we don't have time to cover in full, but we think is just as interesting, which is that Revolut is facing further UK license delays, but meanwhile, it has been acquiring an AI travel agent. So Revolut has experienced further delays in obtaining a full UK banking license, owing to regulatory concerns over its risk controls related to cross-border payments. The digital bank's mobilization phase, which began after receiving partial approval last year, was expected to conclude by the 25th of July this year. However, there has been no progress, and the company remains limited to accepting total deposits of just £50,000 in the UK. The UK's Financial Conduct Authority, the FCA, and the Prudential Regulation Authority, the PRA, are seeking assurances that Revolut will enhance its risk management controls to support its rapid international expansion. But meanwhile, Revolut has acquired Swiftly, an AI-powered travel agent startup, to enhance Revolut's loyalty and lifestyle products by integrating Swiftly's proprietary AI technology. So these are two really interesting stories from, one of the world's fastest moving fintechs. Revolut, of course, has banking license from Estonia that enables it to operate in many European countries. So it's only really its UK business that's being really held back. But it must be very frustrating for Revolut that it has failed to get that approval. And of course, there have been many banks that have got caught out by cross-border money movement and have been in trouble with regulators for having inadequate money laundering controls. And clearly the regulators are trying to avoid Revolut, which is of course a very popular way of moving money across borders, trying to avoid Revolut becoming a vector for people moving money illegally or anything like that. So very frustrating for Revolut. I'm sure that license will come. But meanwhile, of course, it carries on building out its own products. And Revolut's move into travel is very smart as Revolut migrates towards becoming perhaps one of the first European super apps as it builds more and more functionality to enable it to help its customers achieve more of their jobs to be done. So I'm sure we'll hear more on this story. And finally, now time for something a little bit different from the world of business to finish this week's news show. Which is that as food delivery drones take off in Ireland, here are the most popular items. So Mana Aero, which is an Irish startup, is planning to launch food delivery drones in the UK, pending regulatory approval. The drones are autonomous quadcopters that deliver meals in about 3 minutes using a biodegradable drop line. Trials in Ireland sparked noise complaints from residents, raising questions about community impact as the technology scales. Meanwhile, the most popular orders so far, according to the founder, have been coffee and, surprisingly, eggs. So what do we think? Arun, is this the beginning of the end for Britain's famously soggy chips? Is this the start of a sort of mid-air seagull buffet? What do you think? I mean, are we going to see drone deliveries of food?
As someone who very much probably abuses Deliveroo and Just Eat and all of those delivery apps, probably a bit too much. I very much look forward to putting my name on the wait list for this service coming to London. I mean, to be honest, I have no idea how it's going to work, but I look forward to being able to order. I've got a little child at home, so there have been times where I've very much forgotten to ensure that we have a stock of nappies at the worst possible time. So if they can bring me nappies at 3 a.m. on drone, I am all for it.
Barry, what's your take? You're looking forward to instant on-demand drone deliveries?
So as an Irishman from Dublin, I have to say I find this story highly amusing, but also a really exciting innovation, actually. Who doesn't like a Friday night takeaway? I have to say I do worry about the seagulls savaging my fish and chips. But I know my family, my sisters had stuff delivered in their back garden through these drones, and they just land and drop off the payload and head off again. It's very amusing to her young boys, 2-year-olds, looking up at this thing in the sky that's dropping off. I think it was nappies or something innocuous. But yeah, a Friday night takeaway sounds like a great innovation. Who likes going out in the cold winter's evening on a Friday when maybe you've had a beer or something? If it can land in your front door, then what's not to like?
What do you reckon, Tom?
I think when I read this article, I thought there's clearly a startup idea in here for kind of egg boxes with shock absorbers in them or something similar. I can't imagine a box of dozen eggs flying to the sky and arriving on your doorstep being fully intact, but there's probably a spin out there somewhere of kind of people being able to create something that's interesting out of it. As a self-confessed sweet treats fan, I do fear for the kind of biscuits on demand subscription service that I'll be tempted and thrown at me. So for my own personal health, I'm not necessarily sure that kind of that's a good innovation that I'm embracing in quite the same way.
So we asked you, our listeners, on our Fintech Insider WhatsApp community, what you thought the worst thing to be delivered by a drone would be. And your replies included a piano, rubbish, a 3-tiered wedding cake, bees, and perhaps the favourite, a baby. Okay, last thoughts for the panellists. What would the best thing to be delivered by drone? Is there anything that you'd love to receive by drone? That's a tough question, isn't it? Possibly Oasis tickets.
I'd like to see a 3-tier wedding cake come across the skies to my back garden. That'd be quite an interesting thing to observe and then also to kind of tuck into.
Would be tasty.
Yeah, it depends. Do I have to also then pay for the thing that they are delivering?
I think so. I think that's how it works.
Free,
Yeah.
then the options are a bit more limited. But no, yeah, I think
Indeed.
I have no idea, so I'm not going to say anything stupid.
I understand that they're actually quite popular for prisons, and there's actually an increasing problem in prisons because prisoners' friends are delivering all sorts of things by drone. All right. Well, I hope everyone has enjoyed the show. That wraps up today's news. Thank you so much to our three fabulous panelists. Where can people find out a little bit more about each of you and your companies? Thomas, where can people find out more about you and about HSBC Innovation Banking?
Yeah, sure. You can find out more from me on my LinkedIn. That's Thomas Easterby on LinkedIn. But also from HSBC Innovation Banking, just go to hsbcinnovationbanking.com.
Thank you. Arun, where can people find out more about you and about Wise?
Yeah, you can always reach out on LinkedIn. That's Arun Tharmarajah. Or if you want to find out more about Wise, wise.com for if you're a personal customer, an SME, or our Wise platform website if you're a bank or online platform.
And Barry, where can people find out more about you and about Raidiam?
Well, firstly on our website, raidiam.com, and also on our social media channel, you'll find lots of interesting things there to follow. So, and by all means, reach out on LinkedIn. I'd love to have a conversation.
Thank you. And as for me, Benjamin Ensor, you can find me on LinkedIn, and you can find out what the team are up to at 11fs.com or on social media. Thank you all so much for listening to today's episode. If you like what you heard, please do make sure you follow us. Feel free to recommend us to colleagues or friends who you think might enjoy it as well. If you want to join the conversation, seek us out on social media. Just search for 11FS or Fintech Insider, or you can email us at podcasts@11fs.com. Thank you again, and goodbye.
This episode is brought to you by LifeLock. It's Cybersecurity Awareness Month, and LifeLock has tips to protect your identity. Use strong passwords, set up multi-factor authentication, report phishing, and update the software on your devices. And for comprehensive identity protection, let LifeLock alert you to suspicious uses of your personal information. LifeLock also fixes identity theft, guaranteed or your money back. Stay smart, safe, and protected with a 30-day free trial at LifeLock.com/podcast. Terms apply.